right. So it is Wednesday. No, it is Thursday. I was going to say Thursday. I'm like, wait, is it really Thursday? Yeah, it's Thursday, December 1st. This is Red Ben. We are looking at the Renko chart for the NASDAQ futures. So I know that if this is new to you guys, I know it's pretty confusing, but what we're seeing here is, first of all, I've taken my coach Simon has an algo that reads order flow as well as structure and some other things, but primarily the stuff you get off the footprint and from reading the DOM, and basically audits that information with signals and color bars and stuff like that that give me information about what's happening on the footprint or in the auction in general. I'm not going to go one by one to talk about what all these signals mean because that's not really the point. The important part that I want you guys to see, I'm not trying to teach you how to build this system, right? And I realize it looks different than your typical candlestick chart. So I've got this on another screen, right? I also use the candlestick charts. It's not that I've replaced the candlesticks. It's that I'm using the algo as a tool to help me execute my trades with more precision, and to give me confirmation that whatever I think I see, that it's really there, right? I can't argue with something visual like this. Like, since this green bar has been programmed to go off when certain conditions have been met, I don't have to go back 100 times and look and try to remember what I saw on the DOM and look at the footprint and read the numbers and try to interpret, like, did I really see that same thing on all these bars or not? That's why it's there, right? It's not necessarily intended to be used as an analysis tool, and you don't need to know what the individual signals even mean to trade it. That's the truth. All you need to know is what you're looking for, and visually, right? You need to understand a little bit about market structure, but really what you need to learn is how to see patterns. And so this is the, like I said, this is the algo that Simon and the rest of the team uses. If you're a regular member in the trade and perform room, you can see Simon's screen and it looks just like this, more or less. The only thing I've changed on this view is he uses these little green and white boxes for these bars. I can't really see them very well, so I've changed it to color bars. But other than that, it's pretty much the same here. So I took this. If you're like I said, if you're a premium member, you can watch his screen. You see this all day. And for $95 a month, it's honestly really good. I don't know what the price is going to be by the time you guys watch this. If you're watching it in the future and it's not December 1st, but currently December 1st, 2022, it's $95 just to be in the room and see Simon's chart. Here is, coaching, stuff like that. See what everyone else is doing. If you're a premium member, which is instead of $95, it's $250 a month, which is still a really good deal. You get the algo on your desktop, so I can open this. This isn't Simon's screen. This is my own screen, right? I can open this and I can change things like the colors of the bars, or if I don't use a signal, like if I didn't use the triangles, I could just take them off. I could just go in here and go to studies and say, okay, let's remove any of these, right? Like I could just remove them. Like here, like here's the down triangles. Let's say I didn't use the up triangles and I didn't use the down triangles. Okay, apply. Now they're gone, right? Now I don't have to be distracted by them. So if you don't use them, turn them off. And then later on, once you get good at identifying like a simple pattern, and you want to learn another trade, then it's like, oh, remember those triangles you hid? Let me show you how to use them, right? And then you turn them on, and then you start looking for the pattern that you learn. And so you learn one pattern, one setup at a time, right? That's very important. And we always start with when you learn, you always start with the ones that have the highest win rate. because it's really important for someone who's not used to trading a system, like where the algo gives you information that you have to have discretion, right? We're not auto trading with this. We're not telling the algo to buy every time there's a green bar. That's not the way it works. The green bar indicates to us that something's going on in the auction that is important, and if it fits the pattern that we're looking for, we can then make a discretionary call to push the button, right? So it's an execution tool. It's not intended to be used as an auto trader. Now, the truth is with a little bit more sophistication, it absolutely could be used as an auto trader. It's just not how we're using it, right? And it's optimized as a discretionary tool, as a discretionary execution tool, not as a. It's not optimized to be automated. So what that basically means is like we all learn what to look for rather than worrying about what is this pink bar being above this orange line and above this high mean, right? I could explain it to you, but it wouldn't help you actually see the trades. And all that matters in trading is making money. It doesn't really matter if you understand why your system works. I'll be honest, like it really doesn't matter. But when I've traded this for more than a year, right? And found was introduced to multiple setups, some with really strong win rates, some with so-so win rates, like maybe 50 to 60%. But the really good ones, but literally like 70% of the time they go off and set up correctly, they're gonna pay me, and then 30% of the time or so they're not. You don't know which trades are going to be the winners and which ones are going to be the losers, but you know we know the because we have it's a systematic process. You can back test it and see how things performed in the past. It doesn't mean that it's going to continue to perform at that rate. Keep in mind, past performance is not equal to future results or whatever, but it's pretty much as good as we have to look for something that's worth trading, right? So, like I said, I traded this for about a year. I used the couple of trades that I learned on here, and I was doing fine, right? But I found that I was missing a lot of moves that I thought I could catch, because I would notice, for instance, that like once we started to get bullish, like some of these green bars would end up extending like pretty often. But when we're not bullish, that wouldn't happen, right? That alone is not good enough to get into a trade. And so I dug in a little bit and I'm like, okay, so we have these signals already, and those make for good execution triggers. But what if I also had a systematic way to visually present what the market's doing so that I can be better at having that discretion of deciding when to take the trade and when not to, and then also to decide where my target might be, and like what the like MFE of the trade should be, because for all of the trade and performed setups, the stop and the entry are predefined, and that's really important to understand. So like, for instance, let me find a trade. So this was technically there was a trap in here because I took it right here. Okay, so when you get one of these, right, which is a little bit delayed when it shows up. It shows up on this bar. You'll start to see this one. It never goes away once it prints, but it takes a couple bars for that one to print. Once that, and that's fine, because once that prints, what we're going to do is we're going to watch that location, and to the right, if we can get underneath it and then immediately save it like that, there's a decent, like 70% chance that if we enter a trade within the next bar, and what the heck? That's weird. Why can't I see that? Oh, I guess it's just so dark you can't see it. So if we enter anywhere in here and we put a stop a point below the low, that there's a 70% chance that from our entry, we're going to get at least 10 points of MFE. And that stop is not going to be on the 24 tick Renko chart. That stop is not going to be more than 15 or 16 points. So that's like predetermined, right? All the trades work like that. The entry is always anywhere in the range of the bar after the bar closes, and the stop is always under the bar. And that keeps things really clean when it comes to people sharing like what they're doing, because like I could say right now like short 12,055, right, and everyone in the room would know that my stop goes here and my entry was on that star, and that I'm looking for 10 points from this location. Like everyone knows that's the setup just by me sharing the entry, right? I don't even have to explain like anything more than that. Not that they're following me into the trade, but I'm just saying like the fact that you can just give a number and a direction, and literally everybody in the room is like oriented to the same exact picture, it really helps with learning. Like if you're trying to identify 2-bar setups, what we call 2-bar combos, so when you have 2 bars in like consecutively that have a certain pattern. So for instance, pink bar followed by a star in a bearish environment generally gives you a 10 point or more extension. So that trade would have worked. It's already reached 10 points, I think, but my general target would be here. But I mean, the entry is like 55, so it's now made like 20 points, right? I didn't put this in the right place. This goes up here at like 45, right? That's 10 points. So this is the primary move. And then anything more than that is runners, right? So I'm taking half at 10 and then targeting down here at the old apexes, and then any sign of aggression from the other side. I actually have a level here, so this would probably be my exit right here. But otherwise, any sign of aggression from the other side, and I could cover the short, right? I didn't take it because I was explaining it to you, but that's an absolutely valid short. It's also a trap. If you look here, there's one of these little flags, little triangle things, and then, which we call an apex. They show up, like I said, a little bit late, but then once they show up, you just look to the right, and you know, this can take 5 minutes or an hour. You don't know. It's a Renko bar, right? Each one of these bars is just range of price. So as it extends higher, you're going to print more bars. They print enough bars to get over this, and then immediately come right back in, and it's a pink bar followed by a down star. And that pattern, like I said, when it's got bearish, when you're in a bearish environment, can give an extension. Then in addition, we also have MACD divergence. So like, you can use all those to decide, like, is that a trade for you or not? You know, some of us in the room only do long only. And then even though you found all those things, you wouldn't take this trade because you are taking shorts, right? Some of us do take the shorts, and maybe we just have bigger, like more rules for how to get into a short, because the thing about the shorts is it's not that they don't work. It's that just the way the market moves, and Simon's talked about, Coach has talked about this quite a bit in his videos before, and just kind of demonstrated this, but the way that the market moves when it's going up is just different than the way the market moves when it's going down. You need to trap traders to get any roll down, and that's the same on the opposite side too, but the way that traders get trapped is different. And I could demonstrate if you want, but like I said, if you look at Simon's Twitter, he posts videos all the time about like why we go long more often than we go short, and it's like all of the metrics. Again, if you're only targeting 10 to 15 points on NQ or 2 to 5 points on ES, right? If that's all you're doing is scalping and occasionally catching runners, you're going to have more success with longs in literally almost any market. There are some days where that's not the case, but almost any market for those scalps, the longs are just going to work better, um, and it just has to do with how the market moves. It's not a perfect inverse, but so you can still take the shorts, but you'd have to realize that sometimes you're going to get stopped out, and then like this one still worked. See that one worked fine. That's a trap right over there. And then here you just have lower highs. But then there's a trap here. See that from far away, and that one works for 10 points. So it's not that they don't work, but sometimes they're gonna let me find one that does it. In some, see, this one worked, this one worked. Like when it's nice and balanced, they're gonna work fine. Where it starts to not work, this one worked. This is the kind of thing you'll see with the short. This one didn't trap, but what you'll see is, I guess I'll find. I probably only have to go to yesterday. I know it was happening yesterday. When you have momentum in the market to the upside, it can take quite a few tries to get the short to hook up. So here you would still got paid, but this is just the kind of thing. It's like, this is how hard it is to find one that breaks, right? So there's the short entries here on the star, right? Traded behind and then immediately close back in. You get your 10 points, but it doesn't break down. See that's like the support, right? It doesn't break down. What often happens is then it comes up and it collects this liquidity, only then to drop. Now this one you got 2 chances to get out before the liquidity run. Once you see this, now it's done, right? Like, and it's just hard. It's nuanced, but this is like messier than what you usually see on the long side. On the long side, it's like a fractal of this. Like all of this movement on the long side happens in like just a couple bars. I'll show you. So on the long side, again, this isn't always the case, right? But I can just randomly go to a spot and be like, because you could, if we're looking in reverse, you could just go find the low, right? Well, look at how this low worked out, right? You had an apex. That apex got traded underneath, and then they trap back in, so you buy it, right? It's also got a green algo, so that makes it even more likely to work. So that's a valid entry that we took, right? And then it actually sets up again over here from this one. That's called a head and shoulders trap back in, but let's not even worry about that. It's a different trade. So, but the point is that if you look here, rather than coming back and collecting this liquidity down here, it makes a higher low and just takes off. All of the negotiation, all of this garbage happens in here, right? The liquidity grab is our entry for the long. Over here on the short side, and this is so classic. On the short side, everything lines up right here. It looks like that's good. You do get your 10 points, so by our metrics, the trade is not stopped. But if you tried to get the roll down, you're going to get stopped out before it works, because now that's another valid entry that then gives you the full roll down. You don't have to deal with that as much on the long side because they do this. All the negotiation happens right here because they made a low over here and they dip below it so severely. This is what it really is. It's a severe drop that catches shorts off guard, and they all aggressively short here, leading to this green bar. Here, buyers don't buy aggressively up here, you guys. They just don't. That's not how people trade, right? But you know how people short? They short this, and they short this, and they add this, and they add here, and then they're like, oh, damn, I'm fucked. right? That's not how people trade the long side. People trade the long side like buy the breakout, hold for dear life, and then give up early, and then maybe they add a little bit here, and then as soon as they see any sign of weakness, they're like, okay, I'm out, right? And so then they're if anybody else just like follows them in and FOMOs, that just takes the liquidity of all the shorts. But the shorts all along have been right. Momentum is definitely dying. It's just that the only ones left over to buy are these FOMO buyers. That's it. The majority of the traders that like have all the size, it happened over here, right? And they were already taking profits. That's what caused this is profit taking. And then here's your FOMO buyers, and they get trapped, right? So you can't fight the impulse move if you're shorting. If you're longing, it I'm telling you, like so often, it doesn't matter. Like look at this. Look at this low. Apex trap. Next. Higher low. See you later. Right? Like that's how it usually works. That's how it usually works. One dip down. They didn't even set that one up. Apex trap. I took this morning. See ya. Right? Now, again, did it work on the short side? Yes. And sometimes it does. So I'm not saying it never works. But the point is that it's just easier on the long side. So, like I said, that's the first trade that everyone learns. You get really good at it. You practice it until you got it down, right? Until you can trade every single time. Here, it hit on the long side. See that? Apex trap. Got underneath, closed back in, printed a star, even better. I bet you half the room is long. I wasn't even watching. I bet you half the room caught that, right? Like everyone knows to look for that trade. And they're already taking, that's the thing, we're already taking profits, right? If you catch that, like I did, I wasn't watching it, so I didn't take it. But I would have. And we already took profits on this trade, right? And if it makes a higher low, great, we've got a runner. You know, if it does this, cool. The stop does not get trailed to break even. It stays here. Because they usually do this, right? They hit your target. Initially, they hit the 10-point to 12-point target. Then they pull back in through your entry, but not through your stop, and then they run. So, yeah. This is, like I said, this is very likely going to hit the yellow line up here. So that's how you trade with this system, right? That's the basics. It does get more complicated than that, right? But it's important that you recognize that, like, I didn't have to. You don't need to know what this means to see this setup, right? This visual representation is just structure. I have a low. I traded under that low. I immediately came back through that low, and that low has one of these, right? That's it. Like once you learn to see it and react to it, and you realize that it works more often than it doesn't. Sometimes it stops, right? Even something that has a 72% win rate, it's going to stop almost 30% of the time, right? But most of them are going to get 10 to 12 points on NQ, and usually like 3 to or so points on ES. Some of them more, right? But 72% of them are hitting that initial target. And like I say, if you go with the longs, there's even there's a better chance that beyond that, you might even get more, right? Like, see, this one's not done. Like it pulled back, and it's just like, oh, never mind. And so if they continue to push it here, you could get, I don't know how much, right? Like you don't know how far it's going to go. I'd say it's probably at least going to 50, and the entry was like 32 or something down here, right? It's lower than, it's about where we are now. Yeah, 33. So assuming we got 43, maybe we didn't hit the target yet. It's going to be close to whether or not we hit the target or not. But one way or another, that's how that one setup works, right? So I learned that. I learned the two bar combos, the pink followed by a down star, or purple followed by a white star. Again, you don't need to know what they mean, But whenever you see this, you know that chances are you're going to get an extension down. Not 70% of the time, but more than 50. Um, as long as you're like located in the right place. But here, there we go. So now they've definitely hit their target, right? Um, yeah, so I learned all those, and that's all you need. I'll be perfectly honest. All you need is to master one trade, this, and get out here, over and over and over and over again, and you will do great. um, like literally change my trading completely. Like from going boom bust boom bust boom bust to like winner 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 loser winner 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 loser, which is how it's supposed to go. So once I mastered that, once I got this, I was I I'm just a kind of curious person. Like I'm always looking for like new ways to take advantage of the price action. So I dug into like what we're looking at and was like, okay, what else would I like to see like visually, right? What are some combinations of conditions that I think if I knew where they were on the chart might help me identify trade opportunities. And so over the course of almost 18 months, I took this and like changed it, um, added to it basically, and turned it into this, which is more complicated, right? There's more pieces to the puzzle, and so it's harder to read because there's more stuff. But realize that all of the same signals, like the trap back in and the star and the little apexes are just sideways, the pink bars, right, they're all still there. None of that's changed. It's just that on top of that, there's extra signals that give me further information about what to expect from this move. And what's cool about that is, even though this wasn't the intention, but by adding some of these additional like conditions to be visual notifications for me, like alerts that this certain order flow condition is happening right now, and then just watching price action, I started to see more patterns, and I was like, huh, whenever I see a star going in one direction and then a box going in the opposite direction, it tends to get an extension. Let's see if that's happened this last week. And then you look back and say, oh wow, it's actually pretty common. Okay, well let's take a random day in the last year and let's see if it was doing it back there. Oh wow, it's pretty much the same. Okay, let's take a random year and load that up. It still works. Weird, right? And so once you start seeing those things, you start digging in, you start theorizing, like, okay, why would that be? Why would you have this signal followed by this signal? Why would this 2-bar combo repeatedly result in a move in one direction or the other? Like, what am I looking at? And once you understand what you're seeing, for me anyway, once I understood what I was seeing, it was not hard to figure out what the pattern should be that gets me into the trade. Even without like additional coaching. But what's cool about it is that since we have a group of traders looking at pretty much the same screen, I mean they're looking at this screen, and then I have all those components and I've just added my own, right? So everyone sees most of it, but some of the things only I'm seeing because they're my own additions. And so like I said, if I see this new combo and I'm just like, wow, I've seen this over and over again, and I introduce it to the room, like, hey, watch for, when you get this yellow star at support, and then if the very next bar or the bar after that has a blue square on it, do me a favor and watch that and tell me if you see what I'm seeing. And then all of a sudden, like, you realize, oh wow, that's actually a really, really consistent pattern that like we should backtest, right? And so like you can literally stumble on like relatively simple patterns that are as easy to see as like watching a video game or whatever. and like you just kind of have to wait and click the button when you see it. It eventually simplifies things so much, right? And that's what's the challenge becomes not where's the trade, like where should I get in, where should I get out, like that's all predetermined. The challenge becomes, should I take it? Can I tolerate? Can I trust the back testing I've been doing? Should I run this program or not? Right. That's what that like, because I mean it really is just a program that you're clicking the button to tell it what to do, but like the way I look at it, like I'm just running the machine, right? I'm sitting behind the machine just making these observations and clicking the button when I see the pattern play out. And the hard part is that you can make execution errors that, like, whether it's like yesterday I was getting like crazy slippage, and then I got anxious and clicked the wrong part of the DOM and got in the wrong side of the trade, and then one of them like didn't trigger and it had to like it was converted. I don't know, like it like all sorts of things can happen after you click the button that you still have to deal with. But the part about, is this a trade or isn't this a trade, and should I be getting long here or should I be getting short, or all that, like that, and where's my stop, and how much size should I use based on the setup, like all of that stuff is systematized. It's just a matter of me confirming that I'm seeing something that I think is worth trading, and then pushing the button, right? So like it's not going to automatically get long here just because we have an apex trap. Like I need to push the button after this bar closes, and I can push it anywhere in the range of that bar, and the stop still goes underneath this. So I'd still be long with those runners, by the way. I was waiting. I was hoping I would get another signal here, and I could have entered late, but I didn't get it. So the triangle down at the purple bar, if that's followed by a star, like a white star, I could have entered the trade late because that would still have been a valid entry. But it didn't signal, so I can't take the trade. And that's something that's very important to understand, is that once you start trading a system, you can't make it up as you go along. If you did back testing on a certain trade that looked just like this, you have to take that trade, and you can't start thinking about new ideas and trading them at the same time, because it's going to mess up your forward testing. So as I find new trade setups, the first step before I trade them is obviously to back test them, but then the next step is to forward test them, which basically means, how does this trade do if I'm actually executing it, like in the future, right? From now, or in the present, I guess. And so you wait for the trade, you see how it looks, you try it out. You see, like, is this usually execution? Is it possible to execute it? Is it easy to execute? How much, like, what kind of price action should I expect while I'm in the trade? How far does it usually go? Like, things like that are really hard to evaluate with just a back test. You really need to see it in real time to get a feel for some of that stuff. But you don't really want to risk real money, like doing forward testing on something that you don't you're not certain that if you keep taking all the trades, that it'll turn out positive. I mean, you're never certain, but until you have enough evidence to convince you that, like, this certain trade pattern or this visual pattern or whatever will, if you just trade every time it shows up, will actually net you something positive, you don't want to trade that with real money. Like, and the thing is that most of us who don't, I mean, for 6 years, I just kind of traded with the candlestick chart, and I didn't feel like I was guessing. I mean, I wasn't even just the candlestick chart. It was the profile and the footprint and the DOM, right? I had a lot of information, but I didn't have any way to visually confirm that, yes, you saw the thing that you wrote down that you were going to trade, right? I had an idea of what it looked like when it was bullish, and I knew kind of the setup that I was supposed to be taking, but there would be constant confusion, I guess you could call it, doubt of whether or not I'm actually seeing what I think I'm seeing. Like, if I had any evidence to the contrary, I would either cut the trade too early or just give up on it, or maybe like move the stop because I thought it looked really good, maybe. And so, even though usually I said I would do this, I'm going to do this instead, right? Like, I'd make all these excuses that basically came from the lack of systematization. Like, it wasn't objective enough. There was too much subjectivity in, like, what does a setup look like. Like, I could explain it to you, but it wasn't so straightforward as wait for signal A, wait for price to get under signal A, wait for signal B and get long and put your stop here, right? It wasn't that straightforward where like I could literally draw it for you. And then I could go back throughout the last like 40 days of my trading and point out, here's where I actively executed that trade and here's how it turned out and where I actually exited, right? Like, that's something that I would like, and I could just look like I don't even have to look at my entries. I don't even have to look at my what's it called, the list of like orders. Like, I can just look at this chart and I could like, if some, like I said before, if someone said, hey, I got long 12/0/27, did you take that trade? Like, I know what they're talking about, right? They're talking about this entry based on this trap, because there's no 2-bar combo and there's a trap here, and that's what they'd be talking about. So I'd say, oh yeah, I took that, I got out at 12/0/35 for 10 points, right? Like, or whatever. Like, it's yeah, with everybody looking at the same exact thing, it helps. So in addition to the algo signals on the chart, and then the zones, which are like, these backgrounds are just like whether or not it's bullish or bearish at the moment. And there's, I guess we're over and under most of them, but these colored areas like this are zones from the profile. But down here, there are two new indicators. And then this is cumulative volume, wave by wave. So each rotation starts a new color. And I can see like what was the dominant wave here. Like for instance, I'll make it just a little bit bigger. It's kind of small. So like, you can look here in the dominant wave, the one with the highest, you can't even see the whole thing. Hold on. There. The one with the highest cumulative volume is clearly this one. That was the dominant wave. And so if you're not sure, is it bullish or is it bearish? Well, the easy way to ask is, are we under the dominant wave? And the answer is no. And so it's like, okay, well, then the next thing we can ask is, since the dominant wave, have you had 3 waves in that same direction that had at least 3 bars, is the way I do it. So this is wave number 1. This one doesn't count because it's only 2 green. And this is wave number 2 up to the high. And then we have wave number 3 right here. So I personally wouldn't even be looking for a short unless they could trap after this. So now I could consider looking for shorts, but I normally wouldn't be fighting here unless I had a bigger picture reason. Or if we just dropped before that and that was a bigger one. Wait, because the structure is what matters. No, it's all of them are bullish. The dominant waves are all bullish. So the idea is that we're probably not at a high here. We're probably not at a high yet. And so if you want to be conservative and only go with the direction of the trend, you don't fight this first wave. This first wave. You don't fight this. And so you don't participate in this down move. And then the next up move is here. And so this one is less dangerous to fight than this one, but still dangerous. And then Now we still haven't had a third wave. See, this one is actually, this turned green. So until they turn around, we're not going to know exactly where this ends, but it appears that this is going to be a 2-bar wave. So you can, what you do with those is you can mark them off because they become pivots. I didn't mean to go into all this, but just so you know, once you get under it and then over it like that, now it's support. And they've trapped this yellow star down here. So the chances that we're going to get a deep push is really low. And so therefore what we should be doing is buying dips here. The right call here usually is not sell the top. It's wait for them to pull back in this zone and then buy it if it sets up. But it's got to give me a bullish signal. But typically getting over and then getting under and then being able to get over it again means that it's not going to act as resistance, and instead it's probably bullish. So while it's just sitting here, let me run to the restroom. I'll be right back, you guys, and we'll see if we get a setup. I'm not going to short this. I might buy it lower, but we might not. All right, be right back. All right. So there are 2 new patterns that I am getting data on. Like I went off on a tangent, but what I was trying to get at earlier is that using some of these new signals that are, again, my own like order flow signals, and the order flow and momentum based, some of which are based on ideas that I used to use for swing trading, but like adapted for Renko and adapted for intraday, and then a lot of influence from Simon's setup from this, right? These originals order flow signals. I'm using some of those, or else like tweaking them slightly, like my own interpretation of what they're looking for. Not to replace them at all, right? It's just a supplement, because a good example of that is one of the 2. So okay. So what I'm trying to look for, just to make it clear, is not replacement setups or setups that are better than the ones I already know. I don't. The setups I already know are win rate wise are the best I've ever seen. Right, the ones that I learned that you could do with just this are the very best win rates there are, in my experience. So you don't necessarily need any more than that, right? You could just do that all day, and you'll have a really really strong win rate as long as you can execute them with discipline, and you don't tilt and you don't do anything else. And so the hardest part for me is not doing anything else. And the solutions to that is either like just trade less with bigger size. That's an okay select. Like for instance, if you're going to get 70% win rate, but you're only going to get 3 trade setups all day, like decide how much you need to make, right? Like is it like 96K a year? Well, then you're going to need to trade like 5 days a week with 2 NQ contracts, and you're going to have to average whatever that is, like $400 or $500 a day, I think, with 2 NQ contracts. If that's not gonna do it for you, and you need 200K, well then you're gonna need to build up an account that can handle trading 4 NQ, and you can still do the same thing, right? Or the alternative to that is take all of the high odd setups with 2 NQ, and then while you're waiting for those to set up, once you've gotten so good at them that like you could almost do them in your sleep, you can study other ways to take advantage of price action, maybe when it's not going to trap. So I've chosen path number 2, and am trying to dig into some ideas that could trigger me into to trades that might not have as high of a win rate as the best trades we have, but have a good enough win rate that I'm better off taking them all, or taking them all in a certain situation, than I am leaving money on the table. The question is, when are those trades most effective, and when do they stop working? Because if you don't know when to stop taking a trade setup, the chances of you going bust are really high. So it's fine to know, for instance, that something has a 60% win rate, let's say, right? Like these 2 setups I'm going to show you probably have somewhere between a 50 and 60% win rate, give or take, most days. But before I would take those trades with real money, and especially at least with big size, right? I would need to know, is that the case in all conditions, or just in an average condition, in a random condition? And when they don't work, like the times when they don't work, is there some condition where they perform way lower than 50%? Because if they do, like let's say they're 60% effective randomly, and if you can filter out the times when that trade works only 20% of the time, then if you filter all those out and you're able to not take even just the majority of those trades, suddenly your 50% win rate strategy, randomly based on the trades that you're taking after filtering those poor ones out, might now be something more like 68. Right, that's a pretty big jump, but I'm just saying, like, it's that math doesn't work out. But that's the, for demonstration purposes only, right? That's what I'm trying to work out, is can I get a significant increase in win rate on some of these trades that seem to work pretty often, but when the setups stop working, they are at risk of taking 4 or more stops in a row. And I don't want, with leverage futures, you really don't want to be at risk, in my opinion, of taking 4 full size stops straight in a row. Like it's generally yeah, like if because I'm used to taking a trade that works 70% of the time, the chances that the times I get four stops in a row are like when I tilt. That's when I get four stops in a row, right? If I'm taking four stops in a row, something's wrong, and I know that from experience and from backtesting. I know that the runs, the drawdowns do happen, but usually it's stop, 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 win, stop, 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 win, right? That's usually how it goes. If it goes stop, 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 I know something's wrong because mathematically that only happens when I'm in a two sigma event, right? Like something has to be really off for that to happen. It's not that it can't happen, but it's very rare. So once that happens, I'm done, right? Because I don't want to trade in a scenario where I'm getting results that are totally different than what I know is normal. And that's useful. But like I said, what I want to know is, for instance, during those times where that one trade just isn't working, is it possible there's another strategy, another technique? Well, no, just another setup. It's the same technique, but a different setup, a different combination of signals that actually could get me going in the direction that the market actually is headed, rather than taking the four stops in a row. Could I participate in the move that steals some of those stops? Obviously, I'm not going to be able to remove all of them, right? Like, that's just not realistic. You can't expect to have any trade strategy that doesn't take stops. That's not a thing, right? If someone says they have a 100% win rate, that's not trading. That's like stealing. Like, that's not a thing. You might have a really strong win rate, but it's not going to be 100%. Otherwise, you'd just bet the farm every single time, and this game would be really easy and it would be over very quickly. So since that's not a thing, you have to. Oh wait, we might have a trade set up here. If it can get under this particularly, or else I'm wondering if this is green. Can I technically take it? Fuck, I might be too late. No, technically no. This guy did get trapped though. Oh, we didn't. Maybe it is. If this is a bullish bar, it's technically a swing long. This has to be bullish, preferably with the star on the opposite direction. We don't know what the bar is going to look like forever until it closes. This star on a live bar doesn't actually, it's just a warning that if it's bearish, which would mean it hits 12:38.75 before 12:57, then it'll probably get a star. We don't know what'll happen on the top. It could turn green, and if it does turn green, I'm pretty sure it's an entry. Fuck, that's irritating because it's not. It is. I mean, it is an entry. It's just not the highest odds entry. It's not the entry that I was hoping for. It's not in a great upper. See these. It's in the upper half of this channel, and I really want my buys to come down here because if I buy this, my stop has to go under support. So I don't want my stop in the middle of the channel. That doesn't make sense. Even though what I'm seeing here is potentially, if they push this, is a trapped seller who's buying back. In which case we're not gonna come back here. Yeah, it's gonna trigger. I just don't like the location. And interesting, I actually don't have this. I hadn't considered this problem with this trade yet, so I'm not totally sure. I know there's similar trades that have an entry on a green bar, and it almost never works when it's up here. So I wonder if that's the case for this setup too. And I wouldn't be surprised if it is, because I just realized the setup I'm seeing is a swing retest setup, and so it usually doesn't make it back here.
but I wonder if that means that when it does trigger here on a green bar, that it's more likely to fail. That's a perfect example of one of these conundrums I'm talking about, where you know that something works often when you do X, Y, Z, and so then you ask yourself, well, what about when X, Y, what about when X and Y happens but not Z? Is since I know that this trade doesn't work very often, is there an opposite trade in the opposite direction that consistently ruins that XYZ pattern? Hopefully that makes sense. It's just I'm like I said, I'm almost like they're good. It didn't trigger, so it's coming to the downside. That's really good. So if this next bar now I can get it triggered because it's in the right place. This is a much better place to long from. So now if this bar is bullish and does it not exit the? It doesn't exit the zone. So close though. I can see this little green line where it's going to close if it's a bullish bar, and it's not outside of this rectangle, which technically it's supposed to be for this trade to be valid. So once again, I don't think I could take an entry here. I'd have to see how does that. How do you reconcile that? Perhaps. Oh well, you know what? It probably means that it only works when that channel is pitched. Or I'm wrong about it having to close outside the bar. That's also possible. But I would think that a blue square here would produce a relatively solid entry. And I will go ahead and forward test it in one of my evaluations here. Because I'm trying to get some more, what is it called? The Apex funding. They have a big sale, so I'm loading up on evaluations and just hammering them away. I probably should be trading them with like 3 times the size, and then when they blow up, just buy a new one because they're only like $60 right now for another week. So I can auto enter at 51.25. Like I could just take a stop entry, or I could wait until that hits and then buy on a pullback. There's not very much volatility at the moment, so like there's no reason to think I'd get massive slippage like I did yesterday, but another part of me feels like there's really no huge rush to get into the trade. So I put the stop order in just in case. Oh fuck! It didn't. No, that's right. Yeah, no, that's right. I put the stop order just in case it like runs up there, but I'm hesitant to trade it that way. Is there? There's that might be divergent. Might be a divergent high. You really don't want to take this if there's a divergent high. And I'd say that's pretty much as close to a divergent high as you can get before being a divergent high. This was clearly a lower high, and this looks to me to be an equal or higher high. So I'm gonna cancel the order.
Canceled.
I believe that would invalidate it. Like I said, it'd be okay without bullish divergence, but I don't really want to buy. See, because this entry would be for a swing, saying like I trapped a short, now we've gotten over them, we came back in. If they respond, the thinking is that it should explode higher because he's gonna get squozed. But if there's bearish divergence on this high, that basically means that the bears actually have the opportunity for momentum shifting, and I don't want to be getting into a bullish momentum trade, which is basically what that is. If the bears have all the momentum, now if we could have bullish divergence and make a lower low, it probably makes sense to buy it even from like a balance standpoint. But I think it would be for a scalp, not the swing that I was initially looking for. So in other words, I think I will wait and see what develops from here. Okay.
What? Oh. I got a DM from a member in the room doing something really dangerous. Oh, it worked. But, well. So, he shorted. What was your entry? Got 20 points, Jesus. What was his entry? Oh, was it? No, he got. Let me find out. He took a high odds trade, a crazy high amount of leverage, and it worked. It was 55. 55. He got short here. This. Oh, did it trigger earlier? Wow, I'm confused. I'm confused. I'm not seeing it. Okay. Sorry. He's gonna give me a picture. It worked. I'm pretty sure it's this one. 55. Oh, is it back here? Oh. No. No. It was recent. It's gotta be this. I don't know how that worked. How would he? Okay, I'm not sure. I'm not sure. But this is a trader normally takes. I'm not going to tell you his name because it's a private message, right? So I don't want to ruin confidence. But a trader who normally trades 2NQ took a 10 contract trade across all three of his accounts, getting short at 55, and thankfully made 20 points on all 10 contracts. Oh my god. So it's $2 per point, right? Per contract, per account. So he's getting 20 points on 10 contracts on 3 accounts. So it's a pretty good day. That's so ridiculous. And what's crazy is he's going to show me, but I actually don't. It's this. I'm pretty sure he's talking about the entry that we miss. And like I said, I just missed it. Otherwise, I would have taken it too. But I don't know why he took it with 10 contracts. Oh, do I have an entry here? Oh, it's sketchy because of this choppiness. And I'm not outside here. We had that divergence. We have not made a new low. I don't think I'm supposed to trade that. Darn. This little line up here is a warning about divergence on the indicator. It's not perfect, but you can see it often does help act as support and resistance. So like you'd know not to long this yet. And then the thing is it works anyway over here. So like you could have longed this and it might have messed you out. Okay, it didn't trigger anyway.
So there's nothing to do here. But what what he says is that he did a setup where you measure the volume. Oh, I do see it. But then it's not valid there. So validated here. So then I would take it here. How did he get in at 55? Oh, on a pullback. I see it. I see it. I see it. I didn't see it at the time, but I see it now. So he's seeing this star develop after we got under all this volume. It came back up, tagged this guy, and made a star, and then he got in on this pullback. Oh boy. And then he got 20 points from 55, 45, 35. Okay, yeah. You know what? I see it now. That's pretty damn good, actually. I didn't see that one. That's pretty cool. He didn't even scale. 20 freaking points. He said he's just watching Sopranos and trading 10 freaking contracts. Like freaking Tony Soprano. Just grew some balls and threw on 10 contracts. Made 12 fucking K. In like however long that was. 15 minutes. Now he's just showing off. And he actually took the money too. He better have. Hold on. You're out, right? Please tell me you didn't hold that. Okay. Okay. Oh. Yeah, that'll nice. Oh, Simon got long ES. I totally missed it. I'm just not paying any attention, you guys. I didn't have ES open. And apparently ES dropped too. Long ES 69. Right there. Jesus. So Simon called this out. Got that. Everyone in the room except for me got that. That's what I get for running a stream during trading hours. But like I said, I was so that's yeah, that's what happens. I'm not, like I said, I'm not gonna stream the room while I'm that we're all paying for when I'm streaming for free. Like, that's not respectful to my coach. So I'm not in there actually seeing what they're doing, but they're posting their trades after the fact. And yeah, he's got a nice runner now. He's still in it. So he got long here, got his scale, held a runner, and his stop stays down here, so he's still long. And I just straight up wasn't even looking at it. 12:30. So this one hit first, and then shortly after that, NQ did the same exact thing. Yep. So I just missed it because I just didn't have it on my screen. I mean, it's a clear trap. Yep. And like I said, I was focused, and then but what's funny is that while Simon took this long, right? I'm not gonna say who I almost did. Another trader got this short, and both of them made tons of money. That's what's so funny. Like, they're both, in this case, they're both trading like 10 contracts, and like Simon makes it here with the runner, and my other friend in the room makes it here. It doesn't matter like which one you take. You don't need to take all of them. That's really what it comes down to. You don't need to take them all. You just need to take the ones that you plan on taking. You need to have a plan and stick with it, and that's not easy. Okay, so as long as we're just sitting here, because there's nothing to do now, because they didn't set me up. I got no, technically, if I would have gotten a blue square here, I believe I was supposed to take the trade, like I said, to forward test this new idea. The idea, the first one, there's two. The first, the easier one to see, is when you get a star at support. So see how they've made support, and then there's a star down, so it's going in the opposite direction, right? And you see this orange or brown channel, right, with the two lines, the shaded channel. When the star is down here, either under the channel or in the channel like this, and then within like the next couple bars, but in the same range, there's an up bar with a blue square that looks like this. Right, that blue square. If that shows up here, or here, or here, and you're making higher highs and higher lows, right? So you're potentially going bullish, or you've gone through a period of consolidation. What am I looking for? Yeah, if you've gone through a period of consolidation and you think you are accumulating, it's actually a decent scalp. So let me see if I can just find one real quick. Blue square. Oh, it'll be easier to find on the small here. This is a smaller time frame. They can set up here too. Fuck, I wasn't watching this either. Did this set up? No. Yeah. Apex trap. See that? Damn. I missed it. See, it didn't trap on this one, but it did on the 16 tick. Yep. I just wasn't paying attention. I could have taken that. Okay. Okay, good to know. Let me see. So this is probably it's probably going to get a nice little impulse move here, and then it might come back down. So let's just wait. But let me see if I can find this setup. See, this star's in the wrong. It would have to be a white star on top before a yellow box. That would work too. But this star is going in the wrong direction. This is a different trade. Yeah, I'll show you. See, this is the right. This is what it looks like with the star on top and then a yellow box. But the problem is we're at support. See that? It's at support. So if it was up here, it'd be fine. But resistance is up here and it's at the bottom. So you don't want to be shorting there. Okay, so no blues, no downstone, no. Okay. Not within a few bars of each other. The star needs to be underneath the box that get the bar that gets a blue box, or above the one that gets a yellow. But here, okay, resistance, right? Star up, followed by yellow box gets an extension. Notice you got it the other way too. Star down, followed by blue box, but you're not at support. You're at resistance, right? And the 16 tick's going to make a lot of those little wiggles like that, where it triggers one way and then triggers the other way. You need to know which direction you're going, which is why it helps to only trade one direction. We don't all do that, but it's a good, if you're getting confused, the best thing to do is just go back to being long only until you get it solid. Blue box, so no star down and it's at resistance. They don't show up all that often. But when they do in the right place, it works pretty often. I'm probably missing some. I'm looking fast. Here we go. Blue box. Okay. Star at the low. See that? Star down at the low. Blue box. Gone. That's what they're supposed to look like. If there was a star at this low, same thing, but there's not. That's a different trade. There's the other one that I'm going to show you. Here we go. Resistance, right? Resistance, star up, yellow box. See ya. That's how it works. Let me see if I can find some here on 24 tick, because it works here too. Oh, I gotta erase it here. Okay. Blue box, no star. Yellow box, not it. Resistance, no star. Yeah. So that's just a trap back in. See, the hard part is the more you're looking for, the easier it is to miss the high odds trades. So you have to be really careful with that. See, this is support. Otherwise, you could take this. This is going the wrong direction. You need to start up before this bar. That's why you get this little stutter step. It wasn't formed right. See, there's no star here, unfortunately. Otherwise, that'd be perfect. That's right in the middle. That'd be pretty tough. There's no star above it, so no. Star's going the wrong direction. There. Star down. Blue box. See ya. And bullish. See how it's bullish already, see? So now it doesn't really matter exactly where it is. If it's bullish, if you're making higher lows, it's good. It's really good. Boxes. Like I said, they don't show up all that often. Lots of boxes, no stars. Wiggles around. Yeah, I don't see it on that time frame. It works on ES too. Let me look on the 6 tick. There'll be more of them. So if you're trading ES, the 6 or the 6 or the 8 work pretty good right now. If it's slow, you can do the 6. If it's too hard to read, then switch to the 8. Okay, boxes. Box. Purple bar. I've seen that combo too. No star though. Here we go. Star down. Blue box is gone. No star. Blue box. It rolls over. Okay, no star here and blue box, and it just went higher. Okay, so this is kind of like a variation. So the stars get stuck. See that? The stars get trapped. And then in that same range later on, just a little bit, you get the blue. And that gets you the trade. So sometimes it's okay if it just doesn't go anywhere. It doesn't have to be one before it. It just has to be in the range recently. No, see pink bar? Oh wait, that's not. Pink bar star works really well. No star. Well, there's one over here. That's interesting. I haven't looked that far back. So these yellow boxes work, but there's no star here. Sometimes they work anyway. Yeah, the diamond followed by the box is not bad. I've seen that work. I don't have metrics on it though. It's like they happen so rarely. There. Star up. Yellow box. Short. Right? So what I like about this setup is when it works, it continues to work. Now here's one that kind of stopped, right? But if you go star up, yellow, it's going to go down. The problem is it's bullish, so you don't want to fight this, right? Instead, the blue boxes basically all by themselves will basically all work. So when that gets beat by a blue box, even though it's way up here, it gets momentum's in the market, so they're not going to give those up. See that blue box, it's just bullish. So like any sign of bull, like they don't care that they're absorbing all these sellers are all absorbing this, so they get this little pullback and they can't even take that back, and so they're just like, fuck it, just fire, right? Like they didn't even, like the stars are way back here and they're still trapping them because it's that bullish. So doing it that way is a little bit dangerous. See here, diamond, blue box, that works too. And it's just so bullish that almost any blue box is going to work. As will any white star and stuff like that. But see, when it's bearish and you don't trap anybody and you try to put the blue box in, they fuck you with the inverse signal, right? So this one's going to work because it's bearish and you've got trapped stars. See that? They're up here above you. And so once you twist the market down with that yellow box, it'll release. So the yellow box is like the release point. And it just depends on if you have trapped traders on the other side. If there's momentum, you have trapped traders on the other side. It's like this. This will work. Even without a star, this will work. This blue box will work all by itself because it's mega bullish. It's going up. See that? It's just straight up. Once you get this impulse move, people are trapped. So now blue boxes will just work. So that's one of them, right? So I'm watching for that. If it's balanced, you need to wait for that star to be right before it, going in the opposite direction, or maybe the diamond, to make sure that there's someone trapped. That's otherwise you are risking getting really smushed. So they're trying to apex trap off of this for this short. See, they're trying to get behind the liquidity and then turn it again. It's probably not going to work because there's more liquidity up here nearby and there's enough momentum here from earlier that we probably will bounce, if I had to guess. So if we get a blue box here, it's really aggressive, but I would say it's probably bullish enough where you can almost buy it up here. A green bar is the green inside or the diamond is not quite as reliable here. Like this is probably going to be a green bar, but it's so high up that it's not that it always fails, but it's a little less reliable. So you'd have to, if you're sure that shorts are trapped and it's bullish, not balanced, you can buy the green bars almost anywhere. But if it's suspicious at all, like just wait. You'll get a better setup, you know. And the easiest way to see that it might not be time to get long is that support is all the way down here and I'm entering way up here. It's practically a breakout trade. So like for me, that's not time to put leveraged futures on the line. Like, oh, that did give me the blue box. Fuck, I was too slow.
Order filled.
Okay, I got it on the pullback. The stop can be like 52. I don't even have to take a very big stop. So this one triggered on the smaller time frame. See that? It may stop, but the here. But if it stops, it'll be a small stop. So since I'm getting this blue square, I'm assuming that there's pretty good momentum here. So I'll put my stop at 51.50, just a little bit below this. But I'm trading now on the 16 tick, so there's going to be more stops, right? It absolutely could stop. But it's suggesting that we're going to get another little push, probably to 74, if I had to guess, that's what it's saying. There is this yellow star here, right? But we'd have to break through him to really trap him. So it's just like that situation I showed you on ES yesterday, where when things are strong enough, like they almost just get spooked, and even though they're not trapped yet, they just let them take it back. But the question is how bullish is it, right? And I'm letting the smaller time frame dictate that we have trap shorts down here, and so therefore I should be able to get 10 points here more often than not. Now, if I only get 9 points in the smaller one, I will just cancel the trade and get out if it's like struggling, because this risk is very small, right? Like I'm only risking 10 points here, so even if I only get 9, I probably should have taken that. Even if I only get 9, I should probably just exit and take the win. Here I got really close and I almost clicked the button, but I didn't click it in time. So it might roll over here. I might have just missed my chance to exit. We'll see. But I really wanted to get at least 9 or 10, and it ran into this. Oh, this might be a problem. The heavy sellers up here might be a problem. They may stop me.
Looks like they're going to stop me. Haven't gotten...
Order canceled.
Okay, there we go. Stopped. So the problem here that I didn't see is we had a ton of negative delta up here. I believe that happened back here. That acts as resistance. Oh, this is going to be a trap back in. I'll have to take it again if it triggers. Even though it's right into resistance, I'm pretty sure I have to take this a second time. Because that was a really aggressive trade, and the trap back in is less aggressive. So I do believe that the market dictates, that the system dictates that if I take a conservative trade, and then if I take an aggressive trade and then it sets up in a conservative way in the same area right after that, it's generally best to go ahead and give it a second try.
Order filled.
Okay, so we're going to hit it again. We're going to see if we can just get that stop back at least. We might not. At least it was small. 49. They might get me. I'm so close to resistance. The problem here is they could try to get a push and just not fill my target. That's the problem. That's why this one didn't work. Is it just ran into this resistance like this, and that's sometimes that happens. You're just trading too close to the sell line. You know, if there's a big seller here, it doesn't have to break it. So I'm being aggressive with my location, and that's why this is possibly going to stop twice. That's the only reason, is that I'm not being aggressive enough on my exits, but I'm being aggressive on my entries. And like I said, I saw it here and I considered taking it, but this one there's really no reason to be like, I might as well just get paid or not at this point. Because if I bail on this and then it goes 20 points, I'm gonna be pissed, you know. So it's like I'd rather just take the tiny stop, if it's not gonna work, because either it traps here and goes, or it's just not bullish like I thought it was, right? And so here I think it makes sense to take the 9 points. It just didn't fill me. But here I don't think I can. I think it's just ride or die here. Like, if I'm not going to hold this for 15 points, like, I probably shouldn't be trading here at all. that's the, like, if you really want to think about being optimal, it's either don't trade either of these or take them both and hold one because you think it's bullish. So it's like, if it stops me twice, it stops me twice. It's still a smaller, even the combined stops are still going to be about the size of a one big stop on the 25 tick, so, or the 24 tick. So it's not the end of the world if it stops, but yeah, it's aggressive. So we do not want them to get stuck right here. That would be a sign of weakness. If they sneak behind this and then suddenly roll over, that would be a short signal technically. If it goes to like 74.50 and just gives up, that'd be a problem. So we're gonna see if we can get filled for one of them here. Come on, a little further. Come on. It's 2 ticks. You're kidding me, right? Two ticks. Come on. Oh, it touched it. It didn't fill me. Go. 1 tick. It actually touched my level and it didn't fill me. You bastards. I shouldn't even be watching it. It makes it so much worse. Jeez, so freaking stressful. Just fill the damn. Well, if it's going to go far because it won't even fill my little... That sucks. I so want to just kick this. Oh my god, it literally touched my level and it didn't fill me yet. I must be like next in line, I swear. It's going to fill me the moment it hits that high. Now, it'll only be for half of it though. Oh, one more chance? Because I'm trying as hard as I can to be disciplined and just take it, or like take the stop or take the win. Like, it's But it, oh my god, when it literally touches my level and it doesn't fill me, it's like, what? But I mean, it's a limit order. There must have been someone else in line. I'm only trying to fill one freaking contract there, and they didn't. They put me at the end of the line apparently. I almost bailed on it when I saw that. And to be fair, it's not wrong to do that. If you're, you know what I mean? It's like, it's totally understandable. I'm not supposed to, but it's only natural to be like, you know what, this isn't working. I'm not getting filled. Let's just get out of here. But I'm working on that muscle of, I took the trade. I've already accepted the risk, and the only way I can make that risk worthwhile is if I hold to my target. But like I said, what's frustrating is the target was literally touched, but I didn't get filled. So then it's like, okay, wait, can I let it go then? Like, what's the rule now? They did not trade above that apex here. They did not trade above it. If they do, I will get filled. Because that's what I was trying for. Is I figured, yeah, they'll at least meet that level. So I put it a few ticks below that. That usually is enough. But the fact that we had this one, they might be trying to... Oh, I didn't even think about that. That was an oversight on my part. They tested this. Oh, shit. I didn't even freaking see that. Oh, that was totally an oversight. I shouldn't even be trading here. But this cluster usually gets broken, but not without a fight. Oh, I should not be aggressive in this spot at all. I should be getting long down here, because this can take multiple attempts. That was an error. This was not the time to be aggressive. Like I said, I got antsy trying to get this blue square to work. And even though it's bullish, it is positioned really high. And then I felt committed. I was committed to taking the higher odds trade I'm committed to taking now. So I had to take this one once I took this one, because this one has a much higher win rate. But both of them are not where I want them. You know? So, but if I agreed that this one was valid, and I almost got paid here, and then it stopped, and then it came right back and gave me a higher odds entry with the star, with the trap, everything's there. The only problem is the location is way far from support. It's like, it's so tempting just to bail on
Order
it.
canceled.
Thank you. All right, it filled me and canceled the stop. Now I've got one more if they want to run it a little more. I've got the other half. Feel free, guys. Go to 96 if you want. Just clean it out now, since everyone was sure it was going down. That's cool. Like, if you're gonna take, what I'm trying to say is, if you're gonna take the high risk, if you're gonna take the high risk trade, you can't skip the lower risk trade. Like, don't let your decision about being more aggressive cause you to miss trades that you would have taken even if you weren't being aggressive. The thing is if you think it through and you know that that's the rule, you might not want to take all the aggressive trades. Because had I not taken this one so, like, aggressively, I could have still taken this and got my 10 points, and I'd be in real good shape now. Whereas instead I'm like clawing back to zero, you know, which is like not really. I mean, that's the risk of trading aggressively, but it's one reason why it doesn't always work, and why you have to be really selective about where to be aggressive. You really do need that read that, like, the direction is already clear.
But like I said, thankfully for the conservative entries that we use, they work way more often than they don't. So even if you're wrong about direction, you're still going to get the 10 to 15 points on the traps. The where I run into trouble is when I try to expand from that and get more aggressive, which has the potential to, catapult me into the next level of gains. But if I let those aggressive choices influence my A game, which is just take all the high odd setups and make sure that I make money every day, that's that would be a problem. So I can't let my experimentation with new signals influence my good trading, right? Like if this is the trade I'm supposed to be taking, I can't skip it just because I decided to be cavalier and try something new. I gotta take the trade I was supposed to take. Even if you're trading in two different, even if you're paper trading this one and real money trading, it doesn't matter. You still need to take this one. If that was the plan, then you take it, right? So that's where I've really struggled. It takes time and practice to build new setups into the system, just mentally, to accept that to know that you can take I need to get to that point where I'm so confident with the conservative setups like this that I'm more than happy to aggressively trade this, because the times it works I get paid even more, right? Whereas when I'm so stressful about this that I almost don't take this one that I knew I needed to trade, that's potentially, that would have been a problem, right? If I don't get paid here because I took this one, well then I gotta fix that, right? Because that rather than the new aggressive trades adding to my potential P&L, it's actually going to subtract from it, because I won't take the trades I should be taking. So, and that's, like I said, that is just a matter of growing pains. I was just talking to someone in the room today about this. There's always something that we're gonna struggle with in trading. It's not like you get the solution and then suddenly it's stress-free and easygoing from there on. No, at first it's how do I trade one contract, and then it's how do I manage these 10 contracts, and how do I decide which trade mode to be in, and how do I decide which trades to dump from the system, and right, there's so many layers beyond just how do I make money with one contract trading one trade, right? That you better have that mastered. That one trade better be that bread and butter trade. Fuck, this isn't gonna work. That bread and butter trade needs to pay you. I could have taken profits up here. That's not what I want to see. I could have taken profits up here. They need to immediately beat that square, or this is done for. I could have taken profits up here at 12 points, and I didn't. I wanted 74.50, and that looks like it's going to cost me. At least it's only half, because I did get my initial target hit, but I held a runner, and I'm still along that runner. But at least, like I said, it's net. It's only a five. It's easy to overcome that half position stop if it happens. So you have to let it. You want it to pay you. Looks like they're gonna stop me. Not yet though. They approached it. They didn't take it yet. Yeah, if they want to not fill my stop, that'd be fine. If I want to just go right back up there to the high, that's cool. See, but they gotta defeat this guy right away. This, it's got to be this bar. We can't handle. It's got to be 50.75. Can't be traded basically. This is one chance. Super tempted to drop it at break even here. Super tempted. Really fucking hard to hold this. Every bone in my body's get red of the risk. Right? But like you just have to trust that like I'm doing it this way for a reason. Okay, I don't like the pink bar on the 16 tick. That's not good. This bar needs to not be pink, otherwise I will bail on it. Well, it needs to be bullish and not pink, please. There we go. Okay, we're good. As long as it closes that way, we're fine. Should get a spike here. That pink bar getting not passed back through. If we could not trade through this pink bar and instead close a white bar up here, we're golden. Oh, here it comes. Don't retrace that pink bar. We are good. No retrace. No retrace. Fuck. Don't do it. Yeah, we're good. Came back to the point of control, bounced. We're good. That's fine. That's fine. I mean, whatever happens, happens. It's fine either way, is the truth. But I actually think this is going to work. This actually looks perfect. Like you get so worked up about it, but the truth is like I said, that is the price to pay to open up your book to trading more aggressive trades. You're going to take more stops. Like the read was right. It's just aggressive. It sometimes stops out, right? Like this, the whole idea here still makes sense. We just have such little room to work here that like you end up taking a stop before you get the win. But the solution isn't to move your stop. It's either don't take the aggressive trade and take the conservative one, or just take them both all the time no matter what and live with the consequences. It's not like throw your, back-tested strategy out the window just because you took a stop on an aggressive trade. You just make it back next time, right? Like no big deal. Like right now, like I'll just it will literally be. I'll show you. It'll be green after this. And if not after this, then after the next one. Okay, so this is the resistance. This is where I expect them to stall. I'd like to see a little bit of a panic. Would be nice. Like a little slippage up there is what I'm waiting for. Like there's no reason for us to panic, but like the shorts with their stops up there at like 74.50, like I want to see them like squirm a bit, which you can see on the DOM, but you'll see it in like tempo. Like all of a sudden that bar will just like print pink. There we go. And then when that panic stops, we want to be out of the trade. Bulldoze it. Push. Take it. You guys aren't going to add here. Come on, give up. Don't defend this. That's ridiculous. Just short from higher. Try again next time. Game over. Pink. Immediate pink again. Watch this. Fill me at 96. One more VR. There we go. Okay, liquidity's been grabbed, so now at any time they could give up here, the buyers. So now we have to be on guard. Another pink bar, and this is very, very fragile. It's fine to exit here. If you follow me in this, it's fine. You're in a VR. Like, it's a good exit. Right? I'm like hovering over the cancel button, ready to give it up if I see anything remotely aggressive. And I will bail on it, and I will get paid. All right.
Order filled.
It's probably not quite done, but there was a bigger seller getting a little higher, trying to stack. It'll probably go a little higher, but it's fine. Like I said, that's good enough. I got the 74.50. probably could approach the 96. Yeah. He started to protect that sell at the high, and I thought they might be finished. Okay, well, a little bit early yet. At least I didn't bail down here. Like I said, I think once you get through this liquidity, it's an art of whether or not you can hang on any longer. I needed that liquidity to get sucked up, and like I said, this wick was enough for me just to say, hey, they're slowing down the momentum. It's probably almost over. You know, do I miss a bar or two? Yeah, more often than not, I do not get the high. But is it a good, chunk of change? Yeah, it's a decent trade still, right? But it technically did not close bearish, so I would say it's okay to wait. But most likely, once it is done, it's going to come right back to that area anyway. But it might have been a little bit premature. Because I don't actually see any aggression now. It's just for that little moment, someone added their order and a buyer pulled their order. I'm like, oh, they're going after it. But they've since changed their mind. There is definitely some absorption, but it's not aggressive. Like, there's sellers sitting here, but not like, no one's hammering at it. You know? Like, the auction is tilted to the upside still. So, if you're still in it, hold it. Like, yeah, you'll probably get a red bar eventually. I mean, a bearish bar eventually, right? And then you can, I think I can do it here. Once you get that bearish bar, it probably will be back at 74.50, and that's definitely the place to go ahead and take your money and run. I like I said, I was a little bit early exiting down here, but still taking advantage of all of this, and so that's the important thing is you get paid for your risk. But they are trying to get to 96. I probably could have waited for this one. Now I think about it, because it was purple at the time, and so I was afraid that when it closed it would be pink, and I'd have to get out. But a purple down bar there actually isn't even that bad. The pink purple would just create like a pivot, so chances are I would actually get a chance to get out had I just waited. I could have. I actually, yeah. See, but they're gonna end up coming back to about the same spot anyway. The actual result is fine, right? That's not what I'm critiquing, but the decision to exit probably needs to be made as it's coming up rather than as it's pulling back, unless it turns into a bearish bar. I think getting rid of it in the wick before making it a bearish bar, even though it was, the result was okay, like the gains were good, but the decision point should have been earlier of I'm going to exit. When I said if I see aggression, I'm going to exit, what I should have what I would have liked to do is decrease my risk there immediately. And so a move I was talking about yesterday was, if you're trading two minis and you start to get that sense that, like, you know what, this might be done, you can get out of it and then re-enter with like two micros. So your risk is going to be minuscule, but you're going to see how often the market's done when you think it's done, because chances are most of us are not as good at identifying exhaustion as we think we are. When you're in a trade making money, it's way harder to like see the big picture and ignore the tiny little picture, and so you end up making decisions usually a little too late, like hesitating when you're like trying to make as much money as possible. You'll know the right decision, but like you won't push the button yet, right? Or you won't, or maybe if the decision is to hold, you'll decide to hold, but that decision then is followed by a temptation, so like and then you could give into that temptation. So you have to. You basically have to. I think what I have to do is I need to objectify the process of making that decision. So, for instance, like saying that I have to wait for the bearish bar to close, even though the location is the same, the result is the same. But an example would be as soon as they close a bearish bar, then that counts as a sign of aggression and therefore I'll exit. But until they close a bearish bar, I'm not allowed to exit until I get X points, right? That kind of thinking will get you practicing the art of holding your trade. Okay, let me run to the restroom. I will be right back since there's nothing to do for the moment. Be right back. We got another hour. I'll stick with it. I'm not shorting this, by the way. We're just going to watch. All right. So Simon's still in his ES trade. The long. He's still long ES. And he said he's going to keep holding it till close. Which is cool. It's a good plan. It's a good plan. I would not short this. Because it's been bullish since yesterday, right? And there's a lot of trap shorts lower. Well, it doesn't mean that you can't get 10 to 20 points. Not saying you can, right? Not saying that's not going to happen. But it's going to be way easier to trade with the trend. And buys in general just work better than sells. And when I say work better, I mean they have a higher win rate. You're more likely to get that little stutter step like what just happened to me trading the 16 tick long. That's more likely to happen on any tick size trading short. So now that's not true for every market, but it is true for ES and NQ.
I want to make that totally clear. Like it's something semi-unique to the index futures. That it has to do with like the fact that there are no natural producers of indexes. Like there's a huge tilt to the long side when it comes to participants, especially the big participants. There are many more buyers in the market in general than there are sellers. So it's just trickier to trap longs. Oh, he's out. He just said he got all out. Nice. Beautiful trade. Well done, Simon. Okay. Cool. So on the smaller time frame, you can see that these yellow boxes are getting immediately beat, right? Yellow box, immediately beat. Generally, seeing this means that this is like potentially capitulation. So this may be the high. And this is one of the reasons that he's exiting. That may actually be the high on ES. This move is usually capitulatory, and the pink bar star with divergence can be the high. So now there's no divergence on NQ, but it does appear that there's divergence on ES. So if you wanted to short ES here, I don't hate it. But you don't always have to sell the top, right? Like it'll give another opportunity. But I don't hate it. In fact, let's do it with micros. Let's do it with micros. We'll short ES. Short ES. 89.50. You can go one tick above that high. I don't know if it's going to work. It's not super high odds. It might have to trap back in first, but there is divergence. Whoops. There is divergence. And we have a 2-bar combo. And then we have what usually is capitulation here. Now, it doesn't have to only be 1 bar, 1 rotation. And an orange bar would be a better entry, actually. You know what? This is not as good as I thought it was. This should be orange. We have not gotten a volume shift. Hold on, this might be wrong. Like not. We have not gotten a volume shift. I did this wrong. Shit. This is not quite right. I want an orange bar. Let's go ahead and exit it here. It's off process. It's not. Yeah, that was close. It's not. This is not right. This is not what I thought it was. We need to get the volume to shift down. It's not done yet. I read this wrong. This is the problem with having so many setups and so many charts. So we don't want pink bar. It might still work, but we don't want pink bar star with a diamond here. All of this stuff is not quite good enough because we need this combo. Pink bar, orange bar. Now, I know it didn't work here, right? But now that we've gotten this capitulation, that move, and if we have divergence, that's got a chance of working. And like I said, that was just a misread on my part. See here, you didn't have the volume shift either. Yep, it couldn't get under that, see? It can't get the yellow line under the pink line, and so it saves it. So the other yeah, well, I don't want to introduce too much stuff, but I've got another idea
that involves these diamonds. And the way it basically works is the diamonds are identifying not only that this bar is closing way faster than expected, but it also means that the bar before it had unusually large volume. And so when you get that, and then the low of this bar gets tested below, and immediately they go back the other way, that is a pretty good scalp. So what it looks like is just like this. It's bullish, needs to be bullish. It's a momentum entry. And you get bullish bar, diamond, red diamond down, the diamond inside the bar. And then you look at the low of the bar before it, and then you look to the right and you see if you can get the yellow line up here below that. And if you can't, and instead they print bullish bars, especially if there's an indicator on this of strength, you can get a scalp. Works on ES too. I'm sorry, NQ. So here, bullish bar, red diamond down. Take the bottom of this bar, right? I'll do it this way. Take the bottom of this bar, go straight across. If they can't get that yellow line, which is where all the volume is, to get under that low, and instead they aggressively return, good to go. So that's why when they approached my stop and they bounced, I was like, oh no, this is going to work. I'm sticking with it. Because I could have actually added to the trade there. It's just another setup, right? We have lots of them. And that's just one that I've recently found. I'll find another one. Right here. Bullish bar, red diamond down. Take the low of the bullish bar straight across. If the yellow line can't get under that green line and you print bullish, scalp higher. If it does get the yellow line below it, now you need a trap like this. Trap back in, and now we're good. That's bullish too. But you need that trap to be there if you get that yellow line below it. Oh, yours went higher, so I could have just held the runner. It never stopped out. So this is what I'm saying, like, take note of that, right? Like, I got out at this wick, and I would have gotten out here on this pullback. But the truth is you really don't need to. Like, if it's bullish, it's just going to keep going. It's not going to take that stop. So as long as now you'd be able to move your stop to under this purple bar, green bar, 2-bar combo. So this 2-bar combo could technically be a scalp to the upside too. Now, I would personally be looking for opportunities to sell here. Personally. Because this looks like exhaustion to me. And 96 was my target. So if this goes pink bar, orange bar, or this goes pink bar, orange bar, it's fine to try short. Because now you have clear divergence on this. See that? Clear divergence. If it comes down here. This will be divergence as well if it comes down here. If it doesn't, then it can just keep going, right? It could go all the way up here. I don't know. And I'd have to make some more voodoo range levels here because I don't have them. 96, 1750. 39. Okay, we got the yellow box, but that's not quite right. We want orange. Yellow box of the star is not exactly right. I want an orange bar there. And again, these yellow boxes will get ruined if it's bullish. So, and note there's no trap buyer up here, so it's just the wrong combination to shift like that. You have nobody trapped, yet they're trying to like bulldoze under it. Like that's not going to work. I don't think you should buy it, but it's not going to work. Now, if they could shift volume lower, we get an orange bar, yeah, then it can go. Or if they push one more time and get a trap buyer like a star up there, then turn around with the yellow box, then we're good. But I do not expect this to hold, personally. And I don't even know if they'll get a bearish bar here. Truth be told. Because, yeah, like pink bar star does not work straight up. Purple bar star would, because that's on the opposite side. Purple bar immediately, if this star was here, that'd be a perfect long. Because it's bullish. Purple bar, green bar, that's going to work pretty often, right? Now this one didn't get pink bar, orange bar, but it did get an orange bar up there, so that's interesting. Here's purple bar star. See if I can watch all three of these. Yeah, see this guy is going to get overcommitted, I imagine. He's probably going to get stuck. Oh, they're going to get the orange bar. I might actually be able to sell it. Look at that. Oh, what the hell? Come on. It's not ready. So.
Order filled.
Oof. Wasn't set up right. Okay. I'm taking with micros. 98. Okay, because I'm fighting the trend here, so I'm not gonna fuck around with minis doing that. But this is right, and this is actually right too. I didn't see that. That arrow is on an up bar. That's the right. This is the right setup. I didn't see that. That was good actually. That's really good for me. I'm gonna try. I'm gonna try it. We tried to short it. Let's see. So all the volume here is there. We need to get under that. Otherwise, it's going to bust right away. The high of this is here. We need to get, for a swing trade, we need to break under this guy. Okay, we need to get under that. Then come back up, and any rejection I can add. Right now, I just want, I want to get 10 to 12 points or so, and hopefully get back to break even from the stop I took earlier. Which, it won't take much. But since I'm taking it micros, it's going to take 10 points to get that 5 points back. So if you feel me, I've got bracket orders, so you'll hear a little like ring, and then you'll also hear order canceled. So I'm not canceling the short. It's the stop order getting canceled. That's bracketed to the limit order. So the little
Canceled.
there we go. So that's the order getting hit. If you listen real closely, there's like a ring in the background too. That's the limit order getting hit, and then they cancel the stop order that's bracketed with it. Which basically means I'm taking it's taking profits for me. Now, purple bars is not conducive to a roll down. They need a real bearish bar down here, not just buyers giving up. So we need to push a little harder, otherwise this is gonna be done. And if I thought it was gonna end here, I shouldn't be taking the trade. So it doesn't make sense to bail on it. I got in this because I thought it might roll down to 53, you know? So, I mean, I'll take profits. I don't want to take a full stop, right? I want to get paid, but I don't want to be out of the trade yet. Because, like I said, otherwise, what's the point of taking an aggressive trade? But what I want is I want this one to close bearish, and then I want to put one more bar down. And they might not do it. There is divergence. There's all sorts of reasons for it to work, but it doesn't have to. Like I said, especially with the shorts, they like to come back and steal these stops and then roll it over again, and that's just what they do. That's not manipulation, you guys. That's just the market. And if your system isn't built to withstand that, like if you're trading such high size that you can't handle those locational stops, you got to fix that. Because it's going to happen a lot. You can't be putting it all on the line. There we go. Oh, spoke too soon. Close it bearish. Okay, they're probably going to try to trap back into this, which means if they trade underneath this, the next bar will probably be bullish. But since this isn't purple, it's not really what I want to take. I don't really want to buy this one. If they do go bullish, I wouldn't normally take it. It's too high up, and we've gotten this reversal signal after capitulation. So I would just not want to be long. I want this bar not to be purple. Also, okay, I got it. They hit another one of my. Oh, they only filled half of it. So that little bell is what you hear when it fills the order, but it didn't fill the other. It left one contract, micro contract hanging there. That's why I didn't cancel the bracket orders. There's 3 of them it was supposed to fill, and only filled 2. Like, once again, it hit the level, but it didn't fully fill the order. This is the problem with trading with 8, 12, 16 contracts.
Order canceled.
There we go. So now you hear the bell with the order canceled because they canceled my stop order. So now I've just got a little runner that I will, that 2 more contracts, micros, that I will leave. I mean, if they want to take me to 31.50, that'd be great, right? Like, if they decide that it's worth 50 points, like, I'll take it. I can't tell if this high has contact with this box, but I don't think it does. Which means we put an orthodox close in here, which means if we come back up here and then reject with like a star or something, or a diamond down, it's actually another setup to be short with. So you have to come back up here and then roll over before taking me out. I can't notice I'm not moving my stop, right? My stop stays up here, not at break even, right? I'm just taking profits as we go. So if I do take a full stop, it'll only be on 2 contracts, which is just a quarter of my entire trade. So it'd be a very small price to pay, and I'd still be positive on the trade. This little green line here is just, it's a moving average of the points of control of the bars. It's not perfect. You can see that we tend to like go over it many times, but it can act as resistance and support. The orange is the same. You'll generally see them try to bounce off the orange when it's trending, and the green is like the point of last resort before big roll downs. But it will act as support before like a big bounce. So it's like here, it wouldn't be bad to be looking for a long here, but you wouldn't want to take it unless it's set up with the algo. But I was watching for this. I wanted, if you remember, I wanted this one to turn into a blue square because I would have taken that if it would have had an algo signal, especially given the location. We traded a purple bar below the green, and then we came to it, purple bar below, tried to get below it, got volume, point of control below it, and closed bullish. So that pattern is good. It would have had a box, but the location wasn't quite right. The box has volume-based location into it. This one, these boxes, they have to be located in the right place compared to like where all the volume's been, like on the volume profile. So this one would technically drop back into this if they close it bullish. But like I said, I'd be looking for the swing anyway, so I wouldn't buy it. And therefore I won't exit the trade. Since I'm still short too. And remember, sometimes they do come back up here and then roll over. Sometimes they just drop it, right? Like it's hot. So that's the advantage of taking the aggressive setup up here, is the times when it doesn't come back and pick up the rest of the traders, you still have a piece of it. But what I will do is if it comes down here and it fills 6 of my 8, and then comes back up here and then rolls over with a star, diamond, or an orange bar, I'll just hit it again with 6 more. I'll go right back to full size. And if it doesn't retrace enough, then that's fine. Like then I just get the 8, and that's good. But those are the kind of more aggressive trades that I'm trying to incorporate, so that I will have more days where I have trades that set up, and less days where I get frustrated because I see them but I don't have the structure to take them systematically. So I'm trying to build into the system places where I can be more aggressive, because I see them, I see the setups, I know they work, I've back tested them, but I also know that sometimes they fail. So I needed to pick spots where I was able to do it. So knowing to take this, but not this, right? That nuance is challenging, and it's not perfect. Yeah, that's interesting. So they put all the volume up at the top, then they stole liquidity, put all the volume here, and you can see it there. Then ripped it down, but now there's volume at the low here, so they may try to bounce this. I don't even hate letting it go, honestly, but it doesn't have to bounce, but it probably does. They've retraced this entire purple bar. Oh, no, they haven't. They've left a little bit of the wick. They're probably going to come back and hit that. Oh, this one didn't get retraced either. Maybe we are just going to drop. You can see how different the price action is going down versus going up, right? Like we stair step all the way up, give all these opportunities to get people long, and then when they're done, it's just like, see ya, right? Like that's, and as a result, you don't get the opportunities like you to short like you do when you long. The only way to short is to do it aggressively, and then you have to figure out like, well, how do I choose when to be aggressive and when not to be aggressive, because I can't be aggressive here. And I don't really want to be aggressive here, but it sure would be nice to be aggressive here, and that's what I'm trying to figure out. And that's what I did. I didn't short any of these. Well, I shorted this one on accident and then got out of it before it stopped out. And then this one set up correctly. See, this is the first one I tried to short, and it's not right. This has to be orange. The star doesn't give enough energy. It's gotta have aggression, and it's gotta shift momentum and volume down. So having the yellow arrow here is even better than a pink bar. I hadn't thought about it, but it's even better than a pink bar, because it means they actually shifted momentum up here too. So they get easily trapped. So now this guy's totally effed, and they're not going to be able to lift this until they print a blue bar that they can get over. So this isn't going to work, and this isn't going to work. Unless there's a blue bar on it, a blue arrow. If there's a blue arrow that suddenly shows up there and then they get over it, then it could work. But they should not be able to this should be really hard to reverse. They could get it up to here though, just to revert the mean. But okay, see, there's the blue. So if it was bullish, you'd expect this to work. And the yellow one is trying. They're trying to get behind the yellow one, right? So we're about to find out who's in control here. Whoever gets beat here is not in control. And actually, that might give me a good exit. Yeah. See, if they get behind this guy and they close a bar up here, pretty sure the short is done. But if they can get under this guy and close it down here, I'm pretty sure the long is done. And we don't have a star down here to make it think that it would suddenly reverse. So I'm guessing it's going to go lower. Even though this is positioned in the right place. That's the question is, can this yellow bar survive even though it's not placed up here where it belongs? It's way down at the bottom of the channel. It would not take very much effort just to trap him, yet they can't do it. So if you want to understand what we're seeing, that's what we're seeing. Is literally buyers giving up. Despite sellers like, you know, shaking their thing right in front of them, like they're not swinging a punch. Like buyers are just like covering their faces, like they're just like hiding in the corner. Please don't hit me. I'll stop buying, I promise. That's what the purple bar says. And then the green bar is like, okay, I'm ready to fight. And then they're like, no, don't hurt me. So there's acting like, yeah, they're just hiding, you know. They don't even want to participate in this. But we don't know until it's closed, right? If it suddenly closes up here, then maybe there's a buyer after all. They're trying to do it. Oh, see the arrow showing up? So now if they close it bullish, it's done. That's what they need. They need that momentum shift. It doesn't have to be done, but there's a chance that they could actually shift it now because they've got the potential momentum. Now that will only print if it's bullish. If it comes all the way down to 53 before it gets to 65.25, that blue arrow is going to disappear. If they close it bullish, I'll just exit for a profit. See all this red delta up here? Someone aggressively sold up there. So if they can get back through him, it could actually squeeze. And sellers are defending it, trying to short in front of it. They're gonna, wow, look at that. Wow, they're gonna stop me out. All right, get out.
Order filled.
I was trying to click the button and freaking missed it. Okay, so I'm out of the short for a profit. Let's see if I was right about that being an indication that things are probably finished going down for the moment. Now they might reset it up. There's another potential setup up here. If they return to that area in reverse, it could set up short again. But that blue arrow here is a sign that they're trying to. Now I don't know. It's on a triangle. That might make it different, but usually that's a sign that they're actually trying to reverse this. And like I said, this blue box should have been pretty easy to take, and this yellow one should be hard to take. So either we're just going to chop in this area, like they might just be stuck. That would make a lot of sense. Or maybe bulls push a little bit higher, and then they re-engage a little bit up here. The sellers re-engage up here. That could be. But this move looked like capitulation. So I wouldn't be surprised if the high is in, but I've been wrong before. They have not reached my level for reshorting, so. Yeah, see, they're trying to defend this yellow box because they know if they get over that, it could actually squeeze. What's ES doing? Oh, ES is potentially trapping a seller down here. This really could squeeze. Wow, they might actually push this. See, ES didn't get the right setup up here for the high. ES doesn't look done. And Q looked done on the smaller time frame, but that might have just caused this. On this time frame, there really is not as much capitulation. Oh, and you know what? That might mean that's a buy. Fuck, what happened? Why is that getting turned off? Oh, that's annoying. I see. I put too many micros in there. Come on back and fill me. I'll take the long. I don't know if I should though, because I'm running into this zone that I said I could short out of. Maybe that's not smart. Let's see. I'm not gonna take it. Let's see what happens. I was trying to buy this, but my micro what's it called? DOM was set up. I wanted more. I was just gonna take 12 micros, but apparently I have the brackets limited at 8 because I just picked 8 for the last trade. Let's see if that saved me. It was just, like I said, it's serious. I just didn't pick the right one. By the time I clicked it and it said it won't work, and by the time I fixed it to allow 10, it had started to move. So I don't really want to take it any higher than the close of this. And as you can see, it didn't really pull back. But I'm curious what to do about this, because it's a valid trap back in. The setup is good, but I had identified with another setup that this area might be resistance. Now that we've gotten an orthodox close below it, and normally if it rejects out of here, it's a sell. So I guess you could buy this and then reverse if it triggers, but that seems kind of complicated. I have seen times where it just rips right through it, so maybe you still take the trade. But like when you have those two competing views where it's like, it's bullish, I think this could continue higher, that's the trigger, but if they reject out of it, it's a short. Like, how often are you actually going to get your 10 points then? I don't know. Like I said, every time you add some complexity to this, the easier it is to make mistakes, because the normal way of doing things is just take them all, right? But there's this sense that I know that 30% of them aren't going to work. And part of me is like, what if one way to figure out if it's going to work or not is whether or not this set up or not? Because while that doesn't work 100% of the time, I know that a ton of the time when they do reject out of here, it goes lower. But like I said, the thing I'm realizing now, though, is that the times that this works, it doesn't reject. So it may not matter at all. It may be better just to keep taking the apex drops. In fact, that's probably correct. Meaning I skipped this trade with no good reason. Well, actually, I tried to take it, but it didn't let me. So that was a technical problem. But I doubted it for no good reason. I didn't take it because I tried to take it and it rejected the order. So I was ready to take it anyway, because it's valid. It's good. But just because it doesn't work this time doesn't mean it won't work most times. You can't use a sample size of 1 and make decisions based on that one result. But like I said, I've seen this set up enough that I know that once you get this closed down here, if you come back up here and reject, it's usually short. So let's see. Then again, if you can't reject out of it, I guess it's not a short. And what I was saying before is, what happens when you're not lined up to this channel, like now, like when we drop out of it right here, we haven't touched the top channel. So is it still shortable, or is that out of position then? And I'm not sure about that either, because it's a new idea. So to get 10 points on that, 78. It didn't? Okay. It's about to get it. There. So I would have gotten my 10 points. And as expected, that was the right move. Even if it reverses, see, that's the thing. It could get you your 10 points and reverse, giving you the short. You could actually take both. So I think the solution is take it anyway. Get your 10 points. Get out. Wait for the short setup. Which is exactly what I intended to do, but I didn't have my dom ready. That's 11 points it's gotten. There it is at the top of the channel. Now if it rejects, we're going to close on. That's a good short. So 68.75. One tick below 69. See, once 69 is hit, it'll close, and then if it's got to go through it. So once it fills everybody at 69, it'll close, and then I want to get triggered in short one tick below that to be sure that everybody that I'm not getting in just as they reverse it, because technically it's got to go through all the orders at 69. So if I want to be absolutely sure that the bar is closed, I'll get in one tick below that. Otherwise, I could wait for it to close and then get short anywhere in here on a pullback. That's okay too. But I've seen this work plenty of times. But notice if it just goes, it won't fill me and I won't lose anything. I'm not short yet. Check the other charts here. So they may not fill me. They may just pose this bullish, in which case I lose nothing and that's okay. But look how they tried to push that down and they just gave up. See that? No one wants to sell this, interestingly. Which means this is gonna act as a magnet. They're gonna come up there and fill it. That's what they're trying to do. And all I ask if they're going to do that they go ahead and do it now before they come get me. So if it hits this, I'm done. I'll just not trade it. And wish I would have. And this is, again, the reason why I should just go ahead and take this trade, because sometimes they do just rip right through this. So, and like I said, that was my intention. I clicked the button, it just wasn't, the DOM wasn't set up right because I wanted to take it with micros. Had I taken it with minis, it would have triggered. That's a little irritating. Oh, you're kidding. Are they going to come film me now? It's still valid. So. I just hate that we're at the end of the day, though. It looks like they're going to come film me. Maybe I will be getting short. Primary target is right back here. This green, because they didn't reach it. So like 44.75 or so, whatever that is. It'll be different by the time it gets there. 46, let's say. Hmm. Yeah, that's fine. We'll see if it even fills me. So I'll take like 10 points and then anywhere in here is good. They may just film me and run like that. Yeah, they didn't film me, thankfully. If they're just gonna run it, I'd prefer they do it now, please. But you can see you're kind of like right in the middle of the range here. It's a little, it's tricky. I don't love it, but I know it works a lot. I did get an orthodox close below, right? Make sure it's valid. Yeah, assuming this is my line, then I did get an orthodox close below. Oh, yeah, I think that's right. And that's really the question is, where is this line supposed to be? It might be here, in which case it's no orthodox close below, and then it's not valid. It might not matter this time because they might just not fill me. If it gets to 87.25, my order's canceled. Okay, I'm out. I'm not
Order canceled.
not gonna short it now. So again, this long trap is the one that keeps paying over and over and over again. That's the way to go. Notice they trapped this orange bar and it was just over for ES. I don't blame Simon for exiting here. It makes a lot of sense. But they just came down here and they just trapped him and they bounced right off of that green MA and whoop. Note they're trying to absorb buyers here, and buyers are sellers, but sellers are giving up, and so that's kind of weird, right? Like there's sellers pulling orders from the order book in there, and that's why price is moving. Yet they're absorbing buyers, so like that. It seems strange. Like buyers are barely even participating here yet. They're and because sellers are pulling their orders, so they're getting an easy move. They're easily moving the market, and yet there's sellers like getting eaten up here. It's bullish. If they hold that, it's not coming back. If this gets held, we're gonna squeeze. A bunch of sellers got involved here. Yeah, so that pink bar star is not as good as pink bar orange bar. There's a ton of volume down here, but they got over it. See that this is the big volume bar, and they sped past it. Usually this will hold on a pullback. This should bounce. In fact, it's probably even buyable, to be completely honest. It's aggressive, but it's if it showed some aggression down here, like around 74.50, it's probably a buy. Let's see if they do it. It's like a blue square here would be really good, or a green bar would be really good. They make a new high, right? So where's all the volume? At the low. Yeah. Yep. Green bar would be good. Star would be okay. Triangle would be, I mean, diamond would be good. If we give back this guy, if we get under this one, we could have a problem. Buyers could have a problem. Oh, they do it. Oh, purple bar. Here. This is where they're going to bounce it. They pretty much need to save this, so... Okay. It needs to be purple if it closes bearish. And then the next one, if it's star or green bar, it's probably good to go. We kind of want a purple bar here. Oh, see, if they, now it's going to be bearish, so now they can't let it go bearish. This might not bounce. I don't think they're not going to do it. Nope. I wouldn't buy this. This needed to be purple. So they're trying to shift momentum back up, but they've got nobody giving up. The sellers are still active. They're trying to flip momentum. I don't think this is going to work. They're trying to come back into this high volume area, and I'm not so sure they're going to save it. They need a purple bar followed by a diamond, basically, is the only way to save this. They're better off not printing this. Yeah, they need a purple bar here. So you got this delta. This should not be renegotiated. If it's really bullish, these guys should be trapped, and it should not be very easy to get back to them. The fact that we just dropped right back into it means that it's not that bullish. So, I don't really like buying that. If they try to bounce it here, I would not buy it. And now with that move, are they putting in more volume on the bottom? Nope, it's all the top. Wow. Sometimes pink bar star just works. It does have divergence. Like, I thought it was going to be this one, but this is exactly what I'm talking about before. The short sets up perfectly just like this. I caught it. Everything's good. I identified that I needed to exit the short. They come up here, they steal liquidity, and they just flip it over, and now it'll give up. Right? So it's like the actual trigger was here, but you had to fade like one stop and then be willing to take the more aggressive trade, the pink bar star, which doesn't even work as often as pink bar orange bar. You had to recognize that this was a trap back into this, and that makes this better. And that's the only way you can catch that top, which is fine. I mean, it's just the way it works. Like, it's not always going to be pretty. It's also not always going to be the top. They could literally do the whole thing over again. Like, look at that. Oh, that's market on close. So they got the momentum shift, but that's probably because of momentum on or market on close, momentum on close, right? Like, that's exactly the kind of thing it's looking for. This one might get one too. Oh, it gets a star. Okay, that makes sense. So aggressive buyers in here is basically all that means. They're pushing with a bunch of energy, getting some follow through. There's really no reason to short it. Oh, they put in a new high on the indicator, so I guess it's this. There's no orthodox pulls below it. It just doesn't look that bearish. I didn't think that's how they would bounce it. But putting a new high on this indicator kind of restarts. It doesn't though. But the earlier one we never got triggered on, right? Oh, pink bar star above it. Oh, I missed that. Pink bar above it, followed by star. That gives a scalp regularly. So that could have been a scalp regardless. I hadn't thought about that. I'd forgotten about that little nuance. That might actually work more often than the swing. Interesting. I'm gonna have to look at that. I see that working a lot. And then this one on the other side, purple bar, aggressive. So basically, the name of the game is do all your trades outside of that box. Once you get this new high in the indicator, where all the volume is, get above it or get below it. So now if there's a new one, the new one is here. So we want purple bars down under it, followed by stars to come back up, pink bars above it, whoops, followed by orange bars and stars to come down. I should see if that works regularly. It might. That might be a repeating pattern actually. Maybe more so. I'm gonna look for those reversals. I'm gonna take a little break after it closes, and I'm gonna come back and we're gonna review the day. It was actually, there's a lot of good trades today, just a lot of action because they're so choppy. And these balance markets give a lot of retail traders a lot of trouble. So I'm hoping it'll be helpful to sort of review like how this system did, because it did really well. And I didn't even take all the trades that I should have, and I could have done better. But then I want to dig into these, like basically 3 new ideas that are not to replace the main ideas, but to supplement them, and see if you just traded those, how you would do today in a balanced, or in a big range balanced day. The cool thing about a day like today is it's balanced, but the ranges were big enough that if you caught the trade, you got paid. So that purple bar is too high. We want it down here to trigger longs. That's interesting. That's a lower high with the volume anomaly. That's usually pretty bearish. Unless they immediately beat it, in which case they're trapped. Huh, I wonder if you can buy this if it closes. Should we try it? That actually sounds like it should work. Because it shouldn't happen. If it's bearish, it shouldn't happen. Okay, well it might not anyway. But if it's right at close, that might be why it's happening. It's super sketchy. There's like no time left. I very rarely see that purple and pink diamond get immediately rejected if it's not bearish. Huh. I haven't thought about it, but that actually might be accurate. But doesn't happen in chop, because if it happens in chop, then it's not. See, usually this is bearish, and it probably is. And so you could just short up here. But what I'm saying is, if they close this bullish and they break over this, is that like a confirmed reversal maybe? Because it's so rare for it to happen. And then roll over. See, now this makes sense. Okay, purple bar. If we get a star here, so back to the upside, it's probably a buy. Let's see if we can get one more scalp. I don't love trading right back into that purple diamond. So I kind of hope it doesn't trigger, but oh, maybe now we're getting it to play out, that we're getting that other trade to play out. How do you know when to stop buying these? I guess when they get under it without a purple bar is how you know. In which case, 73.25 is a buy. And if they don't trigger it, they don't trigger it. They don't trigger
Order
it. So
canceled.
cancel that. Okay, now we're under without a purple bar. Now it's orthodox close below. So now what we want is we want to come back up, hit it, and turn around. That's how you would get short. And it would be a swing short. Orthodox close below, come back up. We're going to run out of time, but we want him to come back up there and reject with aggression. And then like buy puts or something. In fact, maybe I'll do that. That's probably the way to do it. Seems crazy, but that's why I buy puts for like December 9th or something. Puts. Okay, let's see. We'll see what happens. They're technically supposed to go back up there and test it, I believe. I don't know if this is a good idea, but I'm gonna try it. So we're gonna go up there and test it, and then reject. And if they do, we're probably going lower. And like I don't know if puts are really a good idea, but I'm gonna try it because there's just not enough time to trade futures. So here, if they reject here, it's a swing short. So puts is what I'm thinking. I don't know how long that will last. I really want them to go back in and touch that zone, but they're probably close enough. I want them to reject now, and I'll go ahead and buy them. I won't risk more than an R, and even if they go to 0, I'm just going to buy like cheap ones. They got to close a bar there before the close. So I need to see a bearish bar close, preferably with a little bit of aggression, but really it's technically anything. I don't know if it's good enough to get puts, but I only have, I mean, technically I could trade a little bit after hours, but let's just see. They might not set it up anyway, in which case there's nothing to do. There they go. They were about to print it here, so I think I'll probably go ahead and take it. Well, not yet. See, I gotta get in before the end of the day. So I'm trying to get this to work. There we go. Let's do it. Please fill me. There we go. Filled. Okay, got a couple. This one filled, so I'll take it. I'm hoping this one fills too. So that's the end of the day.
Order filled.
I'm taking it for a couple points here. It's late though, so I only have like 15 minutes. I'm just gonna see if I can get like a quick 10 points. It's usually a swing short, but it's, you know, the end of the day. I don't love the purple bar, but it is what it is. I can't hold this through settlement though, so I'm kind of, it's a little bit of a, it's not a great idea. Like I can get back in an hour and a half or whatever, but I've got to be out of this trade quickly. So I just kind of want it to drop real quick, and I'll take my profit. Like you wait for it for that long, you kind of want to get paid for it, you know? I'm profitable in the trade. I could technically dump it. All right, I'll get out of break even. I'm not really supposed to be trading after market anyway, but I do think it's valid. I've got it's we'll just have to use it as a intellectual exercise. So let's see. How did we do? Cool. So I had a pretty good day. No, but you can see that one, the top account that I traded with you guys got drawn down quite a bit because of commissions. I was trading micros, and that you can see how much harder it is to keep a net P&L that's positive with micros compared to the minis with the other two. But you can also see that my win rate wasn't as good this afternoon. I was a little bit more aggressive, and my exits weren't perfect. And then I did make one mistake, straight up mistake, where I entered a trade that I wasn't supposed to, and I lost $60 on it. But didn't take a full stop because I realized it was wrong. So that's all right. You can see that this does appear to be working, and that's not a surprise. The only reason I exited, it wasn't so much because I thought I was going to fail. It's that I'm not actually perfectly clear with how long I can stay in the trade after market. I think it's 15 minutes, but it might. I don't actually know, with these evaluations, and I don't want to get a failed evaluation just because I was experimenting with a new trade. But like I said, if this had happened any other time other than post market, I would have just held it. But I figured, why risk an entire? If I really don't know what the parameters are, I probably shouldn't be in the trade. So anyway, yeah, that's it. That's that. If you guys have questions about the algo, you can contact my coach Simon. He built the original algo that mine is based off of. His email is trade and the letter N, the word perform @gmail.com. If you got questions for me, you can always find me on Twitter and DM me. Yeah, so that's it. If you guys like what you see, please let me know. Follow me on YouTube, and